Hi everyone, I hope you are safe and healthy with your family and friends. In this video, we are going to discuss in detail about 11th Standard Accountancy, Chapter 3, the books of prime entry. Accounts have two approaches. What are they? The modern approaches of accounts and the traditional approaches of accounts. If we take modern approaches of accounts, they are classified into 5 categories. What are they? Assets, liabilities, capital, revenue and expenses. Last two videos we discussed in detail about what is assets and what is liabilities with many more examples. Today we are going to discuss in detail about what is capital, what is revenue and what is expenses with the examples. Let me see one by one. First one, what is capital? The capital is nothing but the money which is invested by owners in the company. That is called capital. In companies, what we have preference share capital and equity share capital in joint stock company. Generally, we say capital as equity. So, what is the other name of capital? Equity is the other name of capital. Then come to what is revenue? Revenue is nothing but income. Say for example, sales, rent received, income received, discount received, these are some examples of the revenue. I will explain you in easy way with 3 to 4 examples. Let me see one by one example. First take sales. How do you get income from your business? If you generate sales, from that sales you get income. So sales would be your revenue in the business. Take for another example, rent received. If you have a space but you don't use that space, you will rent it out to someone else, like third party. You will get some return from it. That means rent received. Rent received from that space would be your revenue. Take for another example, interest received. In business, if you have, say for example, in a business, you have some money. You invested that money in someone else, in somewhere, whatever it is. You will get return out of it. Interest received would be your revenue. Say for another example, discount received. In business, if you purchase some goods, from that purchases you will get some discount for some goods. Discount received would be your revenue. In generally, mostly the sales is the revenue in the business. Next point, what is expenses? The expenses is nothing but the cost of operations in the business. In course of business, you will get the expenses. To run the business, you will get expenses. But from that, you don't expect a future economic benefit. For example, what are the expenses? Say for example, rent paid, electricity bill, telephone bill, salary paid. These are some examples of the expenses. If you run the business smoothly, successfully, properly, you have to pay the electricity bill, you should pay the rent, you should pay the telephone bill, you have to pay the salary to your worker. You can ask me a question. What is that? Why these things are called as expenses? Why these things are not called an asset? Why? Because these things, rent paid, expense, electricity bill, telephone bill and salary paid, you already taken the benefit from those things, from these things, okay. So this is the main important thing. These things are called as an expenses. In easy way, I will explain you why these things are called as an expenses. Okay. Take for the first example, rent paid. If you run the business in a commercial space, you will pay the rent at the end of the month. Take for example, at the end of the January, but already you taken the benefit from the space at the entire month of January, then only you will pay the rent. It will occur, it happens next upcoming months. The same procedure, you will pay the rent for February at the end of the February, but you already taken the benefit from the space at the entire month of February, then only you will pay the rent for the at the end of the February month. So next upcoming months also you will pay the rent, but you already taken the benefit from the space at the entire month. Okay, you underline that point. You note that point. Okay. The same next example, electricity bill. If you have to pay the electricity bill at the end of the month, but you already taken the benefit from the electricity at the entire month, then only you will pay the electricity bill. You will pay the same procedure apply for the telephone bill. You will pay the telephone bill at the end of the month, but you already taken the benefit from the telephone at the entire month. Next upcoming months also again and again you will pay the rent, electricity bill, telephone bill, etc. etc. But you already taken the benefit from those things. If for example, if you pay the salary to your work at the end of the month, but you already taken the work, means benefit from your worker, you already taken work from your worker at the entire month, then only you will pay the salary to your worker. Then only these things are called as the expenses in the business. Then you are asked why these things are not called as assets. Why? Because assets has future economic benefit. Say for example, if you purchases a machinery at ₹5 lakh today, so you own it, you have a right to control over it. You can expect at least 5 to 10 years the machinery will give the life useful to you to run the business at least 5 to 10 years. So machinery will give you future economic benefit to run the business at least 5 to 10 years. But in rent, you already taken the benefit for the entire month. Next only you will pay the rent bill at the end of the month. So these are the difference between why these things are called as an expenses, why these things are not called as an assets. So I hope you understand very well the modern approaches, 5 classification of modern approaches: assets, liabilities, capital, revenue and the expenses. Up to this video, the modern approaches are completed. Next video we will discuss about traditional approaches of accounts. Thank you. Take care.